Hello there, this is fairbinaryoptions.com. As you can see on the screen in front of you, I would like to take a look at the US dollar and the Japanese yen here. The reason for looking at this pair is that on the 4-hour chart, market just seemed to ended last Friday with a break out of a flat with a double failure. What does it mean, a flat with a double failure? It means that both the B wave and the C wave failed to break important levels. Now, our analysis starts from the highs here. So from these highs here, and of course moves to the downside. And in terms of Elliott waves, this would be a wave A of a bigger degree, this wave A here is formed either by an ABC like this with a falling wedge, or ABCX and then ABC. So either a double combination or a classical elongated flat pointing towards a triangle on the bigger degree. It doesn't really matter. What's important is that this is a three-way structure. It is corrective. Whenever you have a three-way structure or a correction, the next thing to do is to take a Fibonacci retracement from the highs to the lows and to see if price is retracing more than 61.8%, the golden ratio, the most important level that makes the difference between a flat and a zigzag. Because this is a three-way structure, then it's mandatory for price to go more than 61 so it goes more than 61.8, then collapses, but still in a corrective fashion goes and takes the 61.8. But the next thing to do, so we have the retracement for the B wave more than 61.8, and the next thing to look for, so this is the B wave, the next thing to look for is how to categorize the flat based on the retracement level that the B wave makes. The let's say splitting of the flats into different categories is being made by that retracement level. This one is going between 61.8 and 80%, and because of that it is being called a flat with a weak B wave or with a B failure. Now, the decisive moment in which a flat should be categorized would be the C wave to the downside, the impulsive move to come, or the C wave to the downside to retrace completely the previous wave A. Well, this one fails to retrace completely the previous wave A, and we have a C wave failure. What does it mean? That the C wave fails to retrace entire wave A. So there you go, the double failure that mentioned at the beginning of this analysis. First of all, the B wave to the upside fails to retrace more than 80%, so it's a B failure. And then the C wave fails to retrace all the lows, or the lows in the previous wave A, and therefore it is a C failure as well. So B failure, C failure, in total we have two failures, double failure, flat with the double failure for the pair. How to trade this one? Well, first of all, we need to define this impulsive move from here to here as being a terminal impulsive move. In a terminal impulsive move, overlapping is allowed between the first and the fourth wave, and by the moment this is broken to the upside, and it is, not only that it's broken, as you can see here, it is also retested, broken, retested, and then market just advances like this. I would say that the first target to the upside would be the highs in the previous B wave here to be taken, to be challenged, and then of course the highs in the at the beginning of the move to come as well. So long story short, this target should be here as well. So what to do heading into next week's trading? Well, of course, what I would like to do is to buy call options. buy call options, and the expiration date is of course end of week expiration date for next week on Friday by the time the US markets are going to close. So let's write on the screen here that buying call options with end of week expiration date by the time markets are opening on Monday. Thank you very much for being here. This is fairbinaryoptions.com. All these analyses and recommendations are possible due to the help of our sponsor here, Lionknife. So make sure you go and check lionknife.com. You go and check our Binary Options Academy on the fairbinaryoptions.com as well, as a lot of information regarding technical analysis setups and what to look for there as well. Thank you and bye-bye.